Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. The firm only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability.
Welcome to Navigating Retirement with Rick Durkee.
Today's world is increasingly complex with scary financial issues on the minds of retirement savers and investors. There are many factors to consider when deciding where to manage your retirement savings. Which way is the economy headed? Which securities are best? How are your returns doing? What are the tax implications of your investments? You can't afford to be blindsided or scared when you're doing retirement planning. Retirement planning is not the easiest thing to do, whether you're planning your own retirement or helping a family member plan theirs. There's lots of things to consider. This is part 2 of a 2-part episode of Navigating Retirement, where I go over the 6 areas that can have the biggest effect on your retirement planning and how to properly manage these areas so they don't seem so scary. Now, here are number 4 through 6. This retirement planning video is meant to be shared with anyone who you might find that it might be helpful for. If you think that your retirement-minded friends or family might be interested in watching this video, feel free to share it with them. Don't forget to copy or write down the link to this video and send it to them. There are several links below in the show notes section with valuable information that you can use in your retirement planning journey. So, are you ready to learn more about the rest of the 6 areas that can have the biggest effect on your retirement planning? Let's get started. Number 4, long-term care. Now, long-term care is one of those costly risks that can happen in retirement. The probability of it happening are greater once we get older. What's the best way to pay for long-term care? Many different ways to pay for it. I'll say this, it's not always about having an insurance policy that covers you for long-term care. It's most important to have a plan. What are long-term care costs and what does Medicare cover? Well, Medicare only covers about the first 100 days of your long-term care needs. And there's more details than that. It doesn't cover 100% of those 100 days. So you need to plan on something that's going to step in and provide that cost of long-term care through your resources that you have. Most important, it's important to have that long-term care plan built into your retirement income plan. Where can I pull from to get the resources that I need to pull from this? And don't forget to pay for this. And don't forget, Social Security is not going to end. Your pension's not going to end. All we do is shift those dollars out of your checking account to pay for your care in your facility, or if you're getting care at home, or if you're maybe in an assisted living situation. Is long-term care insurance worth it? I mentioned long-term care insurance before. If you're in retirement now, probably not a good move to buy traditional long-term care insurance. It's going to be very expensive. The policies that are available are limited. The carriers that are even available today are now limited. Traditional long-term care insurance really should have been purchased in your early 50s, maybe mid 50s at the latest, because the cost of those policies goes up as you get older. So, long-term care insurance may not be worth it. However, insurance companies have developed hybrid long-term care insurance through attaching long-term care insurance benefits to products like life insurance or annuity products. Life insurance, for example, can be a very useful tool to help pass on your estate. But what if you end up going into a nursing home, both you and your spouse go into a nursing home because they had a stroke early in life? All of those resources that you were planning on passing on could be used up. So what if you had a life insurance plan that paid you either way, that if you died in your sleep, like we all hope we do, it would pay? But if you needed to use the resources from the death benefit of the life insurance while you were still living to pay for your long-term care, you would have that option. that might be something to consider. And in that case, I would say long-term care insurance might be worth it. Is long-term care insurance tax deductible? Well, it is in certain circumstances. You need to speak with a tax professional to do that, to plan for that. It is available through C corporations to be able to provide for their employees on a tax deductible basis. It's more important to look to make sure that your long-term care is tax qualified. Now, if it's tax qualified, that means that you're going to receive the benefits income tax free when you receive long-term care benefits from any insurance policy, or from your life insurance or annuity products, from any insurance type products. So long-term care insurance can be tax favored if you do the proper tax planning for it. Now, we're on number 5, got to keep moving. We're running out of time here. Number 5 is taxes. Taxes can be really scary in retirement. Have you or are you taxed differently in retirement? Certainly you are. And you need to look at the streams of your income, and we need to do an income plan to make sure your income is being allocated to you properly so that it's not pushing you up into higher tax brackets, which will mean that you pay additional taxes. But your different streams of income are going to be taxed differently in retirement. How can I avoid paying taxes on retirement income? Go through a 3-step review process with us here at the Coastal Financial Planning Group, and we're going to help teach you some proactive tax planning techniques that are going to help you avoid paying taxes on retirement income. There are several ways that you can do that. We need to sit down and go through a 3-step review to help you plan that. Do pensions count as earned income? Well, in retirement, you're no longer earning income. You're not getting a W-2 from that pension, but yes, pensions will count as fully taxable assets that come to you in an income source, and they'll be taxed at ordinary income tax rate. Now, finally, our number 6 point that we certainly at the Coastal Financial Planning Group do not want to have this be scary for you. You have to trust an advisor that you're working with. They're handling your life savings. Certainly, this should be somebody that's a fiduciary. As we've explained in previous episodes, it's someone that should be running a process that you feel comfortable with, and their process provides you procedural trust. So procedural trust will give you the confidence that you're working with an advisor that can handle your life savings and also handle the risks and issues that you may face in your retirement years. How do I know if my financial advisor is honest? Well, you can check with the Better Business Bureau. That's one way. You make sure that they don't have any reports or dings on their licenses. You can check with FINRA, and you can check for their securities license to make sure that they have been honest with clients in the past. Those are a couple ways that you can check on financial advisory status as far as whether they've been had some past issues with other clients and been reported. What is a fiduciary financial advisor? I spoke about that in a previous episode of Navigating Retirement. Fiduciary means they're working in your best interest. At the Coastal Financial Planning Group, it means we're going to develop your plan first and then make recommendations as to what solutions will fit your plan. Is the Coastal Financial Planning Group a fiduciary? Well, I answered that question for you now a couple of times. Yes, we are, and we look forward to giving you a plan that's going to be in your best interest going out throughout your retirement years and beyond. Thanks for watching part 2 of this 2-part series of Navigating Retirement. You now have some useful tools that you can use when confronting the 6 areas that can have the biggest effect on your retirement income planning. I want to make sure that those aren't scary. It can be difficult to figure out what to do and who to trust with your financial future in retirement. Call us today for a free, no obligation 3-step review. Call us at 843-735-5065. And thank you as always for watching Navigating Retirement and for sharing these video podcasts with other people. Retirement is a big step in life, one that shouldn't be taken lightly. It's never too early, never too late to start planning for your retirement. Thanks again for watching this episode of Navigating Retirement. We look forward to having you back.
Catch more of Rick Durkee and Navigating Retirement by visiting cfpgroup.biz.
While we believe the information in this broadcast is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Third-party rankings and recognition from rating services and publications do not guarantee future investment success. Working with a highly rated advisor also does not ensure that a client or prospect will experience a higher level of performance. These ratings should not be viewed as an endorsement of the advisor by any client and do not represent any specific client's evaluation. Generally, ratings, rankings, and recognition are based on information provided by the advisor. Please contact the advisor for more information regarding how these rankings and ratings were formulated.